To make a move like that, you have to have kahunas and conviction.
Long term, I'm bullish. We could see about a 20% correction next year.
This is Josh Jelinski, the financial quarterback. Don't touch that dial. Married couples have a choice every year. Do you file separately or together? While the tax code generally rewards joint returns, there are scenarios where filing separately pays off. While married filing jointly, or MFJ, involves a single return, MFS, married filing separately, means you and your spouse have your own filings with individual income, credits, and deductions. A large majority of married couples tend to do the easy thing and file jointly, about 95% of the time, according to Pickering, a CPA. But couples need to run the numbers to see which option is best. There are a variety of options to consider making this decision. I'm going to give you some situations where married filing separately may make sense. You have an income-based student loan repayment plan. With an income-based student loan repayment plan, your monthly payment depends on your AGI, and that's typically higher when filing taxes jointly. Also, if you want to avoid the marriage penalty that they've brought back, it's one scenario where it may make sense to file separately, but you'll need to weigh the downsides of filing apart. Another benefit may be, what if you want to keep your finances separate? Well, if you want to keep your finances separate, I would say it's better not be married. Some couples, whether they're happily married or planning for divorce, prefer to keep their finances and their share of taxes separate. Those marriages tend to not last long. For example, one spouse may be a business owner who pays taxes quarterly, and the other may have taxes withheld every paycheck. They may want to keep the tax liability with each spouse. Another reason is you may want to maximize itemized deductions. When filing your taxes, you either choose the standard deduction or itemized, whatever option is higher. For 2022, the standard deduction for a married filing together couple is $25,900, making it tougher to claim tax breaks for medical expenses, charitable gifts, state and local taxes. But there are still ways to save on your taxes. Also, the nice thing about the Secure Act 2.0, from a listener perspective, is if you have 529s and say your kid went to college or whatever it might be, and you have money left over, now you can convert that to a Roth without a penalty. So pretty powerful benefit. However, you can't mix and match. Both spouses need to itemize or take standard deductions on their separate returns, which may not provide equal benefits. We're talking now about the downsides of filing separately. While filing separately may seem better in some scenarios, there are other trade-offs to consider. For example, separate filers typically can't make Roth IRA contributions because the MAGI limit is $10,000. So if you want to do a Roth, it's better to do married filing jointly than separately. The IRS also blocks or limits other write-offs for separate filers, such as the earned income tax credit, education tax credits, the student loan interest deduction, and more. If you go down that route, you could be losing out on potential tax benefits. Noting that it's critical to run an analysis of both ways to figure out the best choice.